Good morning. What's up, guys? Happy Monday. Hope we're all having a good start of the week here thus far. Market is, of course, open, so let's get to work, at least on stream here. Giovanni Joe, Vinny, good morning, guys. Vanny, Jake, Bruce. How we doing? Good to see you. Hope you guys all had a good weekend. Hope you weren't fiending too much to get back to the charts, because here we are, ready to rock. All right, guys, it is certainly a range morning. If you take a look up top, bottom of your screen, that is the New York session daily chart. And you can see that this little bear breakout attempt has now basically reclaimed the entirety of the move, kind of fading back upside into the range, reclaiming all of it here in the last week or so of trading. So today's range is kind of a small body thus far, right? The ATR right now is sitting at just above 10, right at about 12, 13 right now on the ATR, so we can work with that. That's not the worst we've seen. At least it's not 6, right? So let's see what we can do. Redneck, good to see you. JF, Tony, Rufio, how we doing? Peter, good morning. Wolf, good morning, how we doing? Right, kind of hanging out, by the way, right at both EMAs. Obviously, we have the 5-minute top left, 2-minute top right. That's the 20 EMA on both. You know what? I'm going to swap out the 20 EMA on the 2 for volume-weighted average price just because it's more relevant. We'll clean this up. I feel like I've been saying this for 2 months, but we're actually going to do it here. But I'm going to leave the 20 on the 5. But I know that the 20 on the 2 has been a point of major confusion for a lot of people. Not really paying attention to it, so we might as well pull it off. Kane, how we doing? Mario, Paul, good morning. Good to see you. All right, minute 52 out here from the rollover of this 2-minute bar. That last bar closed as a doji. Did have a range about 10 and a quarter points. Not the worst we've seen, but we can, we can work with it. All right, so the plan here this morning, I gotta do my best to find the established range, which, by the way, is going to be different depending on, who you are, how you see things. That's part of the process here. So I'll find whatever I think to be the most relevant range, and then really I'm interested in betting against breakouts. But there's a lot of nuance involved, so take you guys along with me here. See what we can grab. Actually, I'll leave this out. Pretty relevant. Sidonia, passed my first eval on Apex last Friday. One step closer. Good work. Very good to hear. I am actually very curious to hear this. I know a lot of you guys stay quiet about it. Some of you guys are a little more outspoken than others. But I know a lot of you guys listening right now have never passed an eval, and you're struggling your ass off trying to get through the eval. It's none of my business if you don't want to talk. If you don't want to, stay quiet. I respect that. If you would like to talk, I'm very curious to hear why you feel like you can't pass the evals. What's the issue? Are you getting really close and then blowing it? You're choking? Is the trailing drawdown killing you because you're taking too big a size and you're swing trading in a range market? Is that what's going on? For some of you, I imagine that's probably what's going on. But, let's talk it out. While we wait for a setup here, I'm very curious what the issue is. Can't imagine how frustrating that is, man. All right, minute 15 out from the close of this 2-minute. Let's keep an eye on it. Curtis, choking, bad risk. What does bad risk mean? SK, revenge trading. F Miranda, choking it is. Thought I had it, then it tanks. Yeah. Yeah, listen, guys. You know, these prop firms, they clearly favor, at least the trailing drawdown accounts, they clearly favor a scalping mentality. But there's a nuance here, because I know, you know, some people in the chat, I'll be in a trade, they'll be like, take it. You still have to have discipline, okay? But in a range market especially, with trailing drawdown, you can't be taking 3 NQ contracts and looking for 120 points. Because even if you're 40, 50, 60 points in the money and it pulls back into the range, which is a very high probability of occurring, your trailing drawdown is screwed. You're done. Happens one time, you're done. So you have to have reasonable, you know, targets depending on the volatility, which is why I have ATR pulled up at all times, bottom of your screen. It's, you know, just kind of above 10, maybe 12, 13 right now. For me, when I'm scalping, I like to look for a half to a whole-ish ATR. Now, when ATR is small, that makes our life kind of difficult. Okay, but we manage, we can do it. And in a range market especially, that becomes especially important to make a reasonable ask out of the market, because that trailing drawdown, you know, these props, they're betting on you taking too big a size and looking for a move that isn't coming, at least probability-wise is most likely not coming in the range market. Now in trend markets, it's a little bit different. I'll size into a trade, get a little bit bigger on the trade, and you know, maybe I will. Oh, hey, there's a new curl. Let's move my stop up into the green below the new curl. But I'm not just going to arbitrarily trail the stop. And in trend markets, I'm not adding to losers. I'll add to winners, right? Because in range markets, it makes a lot more mathematical sense, at least for me, to add to a loser than it does a winner, because it's not going to go very far in your direction. And when you're adding to a loser, the rubber band is stretching even more taut, so to speak. Now, listen, there's a lot of ways to do this. That might not make mathematical sense for the way that you trade. For me, that's how I like to do it. So you gotta understand, though, these props, man, they favor a scalping mentality, but you still have to have discipline. That doesn't mean in a high volatility environment you come in and scalp for 3 points, because when you lose, you're gonna lose 60. All right, and that starts to get kind of inverted. It's really hard to have a good enough win rate to have that bad of a reward to risk, right? You guys know I'm big on negative reward to risk. That's a little crazy, though. All right, you can see here. Got to keep an eye on this. Though I am inclined to believe that we're probably looking more at this as the bigger range. We'll keep an eye on this section of a wedge. If we did get a nice clean bull bar closing near the high here, I would get short and just look for a rollover. Glad you enjoyed it. The boring trader. The boring traders tend to be the rich traders. Yeah, Felder, there you go. Just talked about this. Exactly. All right, minute 23 out. Let's see how this 2-minute bar closes. Again, if we get a nice clean bull close up top here, I'll get short. And if we reclaim, I'll figure out the risk once we're in. But if we reclaim these wicks pretty heavily, we'll just stop out and move on. But I want to bet against that breakout if we can. So about 65 seconds out. Let's see what we get. Trader Sean, strategy hopping. From scalping to ICT methodologies to reversals, most of the time, I know where the market wants to go, but all the stop losses accumulated beforehand blows accounts. Dude, just do what... Listen, look at the price action, figure out a methodology that makes sense for you, and think, hey, is this logical? Does this make sense in my head, the way that I believe the market tends to move? For me, I believe in self-fulfilling prophecies, stop hunting, and price action. That's what I believe in. So you guys see me taking setups that most of the time. Obviously, sometimes you take a trade that in hindsight you're like, probably wouldn't put that on again. But those need to be minimal. So for me, I'm just doing what I think, hey, what the hell makes sense to do here? When you really dumb it down and think of it that way, guys, like this isn't you can't out-science the market because it's so efficiently priced that you just end up chasing your tail. You have to like really simplify things, still be smart, still approach it with that attitude like you're a top performer, and you have to approach this using your head a little bit. It's not so easy, but simplify the process and say, okay, with that intelligent approach, does this make sense? Mathematically, does it make sense to add to winners in a range market if ATR is 12? For me, for you, the answer might be yes. For me, the answer is hell no. Because if I'm already 11 points in the money, we're back in the middle of the range. Guess what? The probability of rubber band snapback is back to basically break even, 50-50. So I should be taking that off, not adding to the trade, right? But adding to a loser in a range market, it's breaking out even harder, attempting the breakout. I don't believe in the breakout in a range market in the cases where I'm putting it on. So yeah, sure, maybe I'll add sometimes. Opposite in a trend market, right? I'm not really adding to losers, I guess depending on the scenario, in a trend market as often. Because you can expect it to go a lot further, right? Mathematically, hey, makes sense. That's logical. And I hate to say, like, maybe dumb down your process, because, you know, trading, maybe a lot of people are looking at it a little too simply. People like to look at trading as like a little too black and white. This is all gray area. There's no black and white. It's all gray area. You live in a fog. We all live in a fog here, so we're kind of trying to figure it out. So for some of you, simplifying the process will be the game changer for you. But if you're already looking at it a little too simple, like, oh, hey, head and shoulders, I should do this, you're ignoring context, and simplifying further is going to kill you. But if you're over-analyzing things and you're like, okay, what's the market context? What's the price action? Yeah, but there's this line and this trend line, this new trend line, oh, that old trend line, this closed from 3 months ago. You're over-analyzing. You need to simplify. You're hurting your brain. We didn't get into this to sit here and just be exhausted. It's exhausting enough as it is to analyze every fucking bar every 2 minutes. Simplify your process, understand the market context, make the best decision you can, and then move on, win or lose. $67 seconds out. Let's see what we get. Chris, good morning. How we doing? Good to see you, brother. All right, coming into a flat bottom here. Kind of at the top end of, just barely into the lower third of this little range here, this wedge. Now, again, if it were up to me here, I'd prefer to get short. Like here. This is exactly what I'm kind of looking for. I'd like to get short on a setup like this. Nice strong bull bar closing near the high of the wedge. Get short there, look for a pullback into the range. On flat bottoms, for me, you know, understanding that, hey, when you have a wedge like this where there's, you know, a descending or an ascending level mixed with a flat bottom or flat top, the flat probably has a 5% higher probability of being the one to break. At least lately, it's kind of been my experience. It's an estimate, by the way. So I'm less happy to get long on a bear test of the bottom than I am get short on a bull test of the top here of this wedge, but I will do both. Again, sample size rules everything. So as long as you have reason to believe that you even have maybe a small edge on a trade, which here's another mistake a lot of traders make. As long as you have a reason to believe you have a small edge on the trade, it should probably be put on. Now, if, let's say, to make the numbers easy, you're running a 1-to-1 reward to risk, and let's just ignore commissions and fees for a second for the sake of, again, making the numbers easy. 1-to-1 reward to risk, if you have even a 53% probability of winning the trade, mathematically it should be put on. Right now, new traders come in and they expect to win 95% of the time because everybody hates losing. I get it. So when they put a one trade on and it loses, they're like, ah, fuck that setup. I don't like that setup. I lose money when I take that setup. Well, you know, either this isn't for you or you need to grow up and understand the business model here. You know, if you have a 1-to-1 reward to risk and you're winning 60% of the time, you are making tremendous amounts of money. That is damn near infinitely scalable until you run out of liquidity for your entries, until there's no longer enough liquidity for you to get into the market on your entries, right? But guess what? You're losing 40%. That's a lot. 40% is not 4%. That is 40%. You're damn near half. You're losing. But it doesn't matter because you have an edge. All right, let's see what we get here. 1:25 out. Let's see if we get a half decent bull bar closing near the high, in which case, depending how it looks, I will get long for a push back up into the wedge range. Rovio, good morning. How we doing? Yeah, see, there you go, Vinny. You can manipulate your trading experience, by the way. I don't think people really think about this. People just ignore the math behind trading, which is silly to me because it's the entire business. But if you don't mind losing small and you really like to win big, you should go really positive reward to risk. Works better in a trend market than a range market, but that's the market context side of things, which is not what we're talking about right now. But if you like get really triggered when you lose, no matter what the dollar amount is, but you just like to win even if it's small, you can manipulate that. You can say, okay, well, you know, what happens if I go negative reward to risk? Well, naturally, your probability of winning goes up, right? Because the market's pretty damn efficiently priced. So if you risk 3 to make 1, it's not 50-50. It's not. All right, too close to the middle of the range here. Give it one more bar. Let's see if we can get a setup like this going that we were just talking about. It's no longer 50-50, and people don't seem to get this. It's much higher than 50-50, the probability of winning, even if you buy and sell at any random point during the day. Now, if you buy and sell randomly during the day, no matter what your reward or risk is, all commissions and fees held equal, you'll pretty much break even. Now, if you did that for 100 years, you might lose because you don't have a long bias and markets have positive drift, right? But with a reasonable sample size, like 6 months or a year, you'd break even minus commissions and fees if you didn't, you know. Which is why you still need to have an edge. Okay, but if you're like, I like to win really big, I don't mind losing small. Okay, not thinking about market context for the sake of explanation, meaning trend or range market, you probably should go big positive reward to risk. 3-to-1 reward to risk. Risk a little to make a lot. If you just cannot stand losing, which, you know, everyone goes, I hate losing. Well, you got to really understand yourself. If losing causes you to spiral, no matter the dollar amount, then what you should probably try to do is either lose a lot to blunt that response, or if you can't blunt that response, you should try to just win more often, which means go negative reward to risk and just try to get a little bit more edge by improving your entries. Right, because you can mathematically engineer an 80% win rate if you go negative reward to risk. Doesn't mean you have edge at that win rate, but if your entries are decent, your risk management is consistent and good, and you're aligning with the market context, you can develop a few percent edge. Which is all you need. All you need to go full time forever is a few percent edge. Now it's living and breathing because markets change, right? All right, new bar here, 2 minutes out. All right, here, 45 seconds out. Let's see if we get a nice strong bull close. If we do, within reason, inside of this wick and deep enough into the top third of this wedge, I will short the rollover. Come on, bulls, give me something to work with. Nasty, nasty inside close. No trade. Next bar. All right, 90 seconds out. You guys know I don't necessarily need to wait. I like to, but I don't necessarily need to wait for rollovers on reversion setups. I like to for continuation setups. But it's even more arbitrary to wait for the rollover, at least for me, on a reversion setup. So let's see here. There was the top of the minute. Put the limit order out and see if we can get a fill here. That's a limit sell, by the way, not a stop limit buy. That is a limit sell. Hold that for now. There we go. There we go. We'll take that fill. Beauty. Suck this up. Put our protective stop out. And we'll leave this down here. In case we get news. All right, see if we can get a bit of a... Ideally like a full ATR. And we'll take it bar by bar here on the risk management. Protective stop is out in case we need to use that. See if these bulls can actually break this out. I like to bet against it. All right, we have 33 seconds out. Let's see if the bulls can close this above 50-50. If they do, I'll manage manually here. Let's see. Sorry. Cut it, move on. Good close out of the bulls, but let's see if they can actually break that out. I'm not going to stick around and find out. All right. All right, minute 45 out here. Derek, Nico, can I ask why your stop, well, was so high? Because I managed manually, you just saw. We cut it. I much prefer to just leave. Okay, so you guys see when I put the orders out, everyone thinks, oh, you know, it has to go here to get stopped, or it has to go here to take profit. No, it doesn't have to do either. We take it bar by bar, right? I say it like every damn trade. We take it bar by bar. So what a lot of traders do is ATR is like, you know, 10 or what is it, 12, 13? Yeah, ATR is like 12. So they'll set their stop 4 points because they're terrified of risk, because they're trading too big. They'll take 3 NQ contracts and they're like, we're trading 3 now instead of 2 today, and then they risk 3 fucking points. And they just get chopped out, and then they say, market's choppy today. This is the most common thing in trading because they're too fucking scared to put on risk. Right? So we trade small per account, scale horizontally. You put on risk, then you manage bar by bar. Accept the outcome like a grown adult, and you move on. See the big doji here? Market a little bit indecisive. All right, let's get rid of this. Still have this flat bottom. Now, as far as stops on the menu here, I would put them right at the high of day up here, 760, 750-ish. So if the bulls can continue this, I wouldn't want to get long right after a doji like that, but if the bulls can continue and give us a nice close here in a minute 15, could have a little stop hunting mentality set up, but it's going to take a decent close here out of the bulls for me to be convinced. Because even after the stop hunting, I can't imagine it'll go all that far. It's a range market, right? Michael, I was on minis and passing evals, then blowing funded accounts. Trying to find my edge and get my strat down, so I went to micros, but now it seems like this eval is going to take ages. I trade minis on evals, and then size down to micros in fundeds. Now, if I am, by the way, if I am for whatever reason trading a funded account individually, like not copy trading it, but I'm just trading it on its own, and it's getting my full attention, I might trade 1 mini, depending on the size of the account. But, I mean, listen, it's always, not always, it's often better to start your starter position smaller so that if you need to or want to, you can always add. If you start your position with 3 minis, kind of a small shrinking bull bar, huh? If you start your position with 3 minis, if you end up in a situation where it's like, well, I really should add to this winner now or add to this loser now in a range market, you can't because you're already bigger than you should be. But I'm definitely not, you know, trading super small and being super careful and only taking A+ setups in evals. I don't have the mental capital allocation that requires is not worth the opportunity cost. I mean, at some point, listen, you got to look at your business model and say, is protecting this $30 eval really worth 2 weeks of my time? No, you gotta understand what's your time worth. Right now, if you don't have an edge and, you know, maybe if you just look at it, and you're like, well, right now, my time at the computer is not really worth anything, then yeah, take your time and develop an edge and an eval. But like, especially once you're in fundeds, and especially when you're taking payouts, even moderately consistently, your time is worth more than spending 2 weeks in a $30 eval. Doesn't mean just gamble them. Still try to be responsible. Try to keep your expenses reasonable, but don't be scared of expenses. All right, we're getting really close here. 67.50. It's kind of that high a day region, right where my cursor's at. Horizontal level. All right. Now we have a dual rollover coming here. So what I'm going to do is swap over to the 5-minute chart. This is still a 2-minute. Let's swap over to the 5. There you go. 5-minute chart here. As this 5-minute bar comes in for a rollover. Let's see if we end up with a decent setup here. Again, high of day is 67.50. Shrinking little bull body, but coming up reasonable. That's reasonable. Let's place that. Beauty. We got to fill. Tuck the protective stop order. Move this higher and just see if we can get a push through. Again, oh my God, you're risking that much? Not necessarily. Right? Calm down. We'll take it bar by bar here. Now this is a 5-minute chart here, so remember these bars, they're not going to be as quick as the 2-minute. Let's see if we can pop through and get some of those stops going, and then where that bar takes us from there. Mark, you got to pay attention, big dog. Gotta be liquid like a speedboat, not like a cargo ship. If there's a setup on a 5-minute, we swap to the 5-minute. If there's nothing on the 5-minute, we go back to the 2 as a baseline. All right, ATR on the 5 minutes, about 18 points, 18 and a quarter points. So let's see how this bar kind of operates up here. Yeah, a couple point push through the high of day, really not much. Gaines, how we doing, big guy? What's up? All right, 30 seconds left here on this 5-minute bar. Sitting as a doji as we currently sit. All right, bulls. ATR here on the 5 minutes, about 17 and a half. Yeah, it's fallen a little bit, Lurt. I mean, not too much. It was at like 18 before. So lots of time here on this 5-minute bar. But I'm not interested in testing this bull breakout too much. Really kind of just interested in looking to get it a 1 ATR on the 5. Okay, so 15 to 20 points is what I'm really kind of looking at here. And no, the risk to the downside is not necessarily that much. Managing bar by bar here. 5 minutes a little bit slower when you manage bar by bar, obviously, right? All right, we'll pull 16 points. And I'm going to leave that actually. And we got to kind of, this is pre-market. Oh, you can't see that actually. That level becomes very interesting. And as we push into a full ATR, that's my cue to move on, look for the next entry. So let's go back to the 2 minute here. And see what we get here on the 2 minute. We got a minute 20 out. Not scared to re-enter if we need to. But, you know, listen, on breakouts, especially in a range market, man, when it makes sense, when you have a reason to take the trade-off, you can take it off, but don't be afraid to re-enter. That's how you miss trends when they develop. So, swing traders do have a pretty big advantage over scalpers in a trend, obviously, right? Because most scalpers, they'll take the first scalp, and then they never get back in because they're scared. I get it. It's hard because you take a trade, it's green, it's like, yeah, but now we're really pushing the limit. I don't know. But if the setup comes, you know, you got to put on that next setup. So this is more of a continuation setup with two very, very strong bull bars. Let's see if this one closes near the high. And let's see here if it turns into another entry for us. And these bars look massive. It's like, oh man, we missed out on a lot of profit. It's like, the whole bar is less than 20 points. All right. We will put out a stop limit buy in case we have to plant it here. Comes the rollover. Boom. Ooh. There we go. That was a bizarre close. Give that about 25-30 seconds, see if we can get a fill. If we don't get follow through within 25-30 seconds, now about 10 to 15 seconds, then I don't want to get a fill anymore and I just want to pull it. With scalping, I want to be in the money as quickly as we can. Sometimes it doesn't happen that way. Couple seconds here, give it till 29. Nope, pull it, no trade. Next bar. Biblical, appreciate you, brother. How we doing? You took the trade, big dog, not me. Well, I also took it, but good work, Biblical. Five minute. Do you have hotkeys for limit order placements? 5 minute. Do you mean stop limit? Yes. The answer is yes. I don't even need a follow-up question. The answer is yes. I have hotkeys for everything. I have hotkeys for putting out limit orders. I have hotkeys for putting out stop limit buy and sells. I have hotkeys for canceling orders. Well, I have a hotkey to cancel the order, the last order, and I have a hotkey to like a get out now, stop me out now. Idea is shot in the foot. That's how I cut things early. It's just a hotkey. For me, it's Alt-K, like kill switch. All right, here comes the rollover. Small little bull bar. I can't get long there. Are you kidding me? Next bar. Casual, do you have a hotkey for stopping FOMO? It's Alt-DB. For don't be a bitch. Yeah, it's just a market order. Eric, when my kill switch, I just want to get out. It's just a close all order. So whether I'm long, whether I'm short, it just gets me out. Good to have you, Steve. Hope to see you become a regular in the chat. Okay, so we have two very strong bull bars on the 2 minute here. Here come the questions, by the way. Oh, you switched back to a 2 minute. Why'd you switch back to a 2 minute? Well, we're back on the 2-minute. Then we have a shrinking bull body, right? And now we have a bear bar trying to close outside of this wick low, near the low. So in 40 seconds, we'll see if we need to get short. Alex, $8 from passing funded after that trade. Good work. All right, let's put out a stop limit sell. Move that as far down as we can to try to avoid some crazy fill if Trump says something. And let's get ready here. If we get it closed beneath this wick low, I'll place it beneath the wick low of the current bar. Inside close, no trade, next bar, 2 minutes out. Same idea applies here, by the way. Now, if we were in a trend market, intraday, not intraday, if we were in a trend market on like the New York Daily, bottom of your screen, which I can't say we are, would I be looking to get short on a pullback like this? No, but we're in a range market, so I'm willing to if we get a bear bar here closing near the low. Just because I personally don't believe that many of these breakouts are going to go all that far. Casual, do you remember your first trade that really hooked you into the game? No, it wasn't like that. Like a lot of people who get addicted to gambling have a story. Like they walked into a casino, you know, they put $10. They walk by a roulette table. They're like, fuck it. I'm in Vegas, man. Let's put $20 on 17. Let's just kick it off and have some fun. And it hits. Worst thing that can ever happen to you. Horrible. They spend the rest of their life thinking they're luckier than everybody else. Even understanding the statistics. Oh man, but it's fucking brutal. That's not a good thing when that happens. It's fun that day, and if you can walk away and never come back, great. A lot of people come back chasing that dragon. But I don't have a story. No, not like that. What really interested me in trading was just this endless pool of money waiting for someone to come pick it up. Now, it makes it sound very easy. Of course, it's not. This is one of the greatest playing fields on the planet, if not the. But it exists. Big old pile of money. But I would say what pretty much got me into trading, at least as a long-term thing, I'm like, okay, there's something here. This is not just a zero-sum game for everybody. In totality, maybe. Was net sell option strategies, because I could calculate the edge and I could taste the edge. It was there. It was built in. You didn't have to develop it. It was just there. Now you had to be smart about how you put on positions, right, with net sell options, but that was the first thing that let me go entirely full-time, pay for everything my now wife and I needed back then. Which, you know, it's not like the living expenses back then were tremendous, but it was full-time. That was the thing. It was like, okay, edge exists in the market. Now let's develop it as many places as we can. No stop limit buy going out there. Inside close. Next bar, 2 minutes out. We have a dual rollover here coming on both the 2 and the 5. So, shall we? Let's swap out to the 5-minute chart. Here is a 5-minute chart. Let's see how this bar closes. 47 seconds out. DG, define edge, please. Statistical edge. The same thing that the casino has over you. You sit down at the blackjack table. Let's assume, you know, you're not card counting or anything. You're just playing the game. Let's say you're playing perfect strategy at the blackjack table. If you play 1,000 hands, or let's say you bet a certain amount of money, the casino has a reasonable expectation as the sample size gets bigger and bigger that they're going to keep maybe about 1% of your money. Now, that doesn't play out exactly with a small sample size of, 3 bets, which is why you can beat the casino in very small sample sizes, but the more you play, the more certain it becomes that you lose. Which is why gambling addicts always lose, because they play too much. Give this 15 seconds only, because it's really not that. I would not call this an A+ setup. Gotta pull it, no fill. That was more like a B+ setup with this wick back. So back to the 2-minute here. Now, by the way, you need to think about that with your trading. Because if you as the player with the negative expected value when you sit down at any casino game, if you technically can beat the casino, quote unquote, with only 3 spins or 3 hands or 6 hands, you definitely can't over 100,000 hands. 100% no, you cannot. But in a very small sample size, if you can beat them and they have edge over you, what does that tell us about trading? Well, in trading, our entire career is being the casino. We need to have a little bit of what's called statistical edge. Now, on any given day, it's a small sample size of trades, which means that the market can beat you, which means you can be red, which everyone hates being red. I get it, okay? But be an adult, grow up. This is a man's game. This is a woman's game. This is a grown person game. Greatest playing field on the planet. Yes, if you take 5 trades, 1,000% you can be red, but take comfort in knowing that if you have and maintain statistical edge the same way the casino does over you, when you take 1,000 or 10,000 trades, the probability of you being green after that is extraordinarily high. If you have and maintain a statistical edge on the vast majority of your trades. That's a very good thing. And you can take great comfort in that, assuming you understand what your data looks like on red days, right? Yes, correct, 5-minute. Which I think is kind of silly. It's not like I'm not a gambler these days. It's been years since I've gambled, but and a lot of you would say, "Oh, you gamble every day." Yeah, fine, fine. Call it what you want. But the basic strategy at blackjack is not like hard to understand. So it baffles me when people don't play it. You can study a basic strategy card for 3 minutes and have it all memorized. All right, 40 seconds out here. Again, we're back on a 2-minute chart. Few seconds out here. Looks like we're gonna get an inside close. No trade. Next bar. All right, guys, don't go anywhere. Back in 2 minutes. All right, we are back, baby. Back on a 2-minute chart here. 41 seconds out. Let's see how this 2-minute bar closes. Maybe, just maybe we get a little something going on here. Really only interested if we can close above that wick that my cursor's sitting on top of. If not, then I still see a wedge. Inside close, no trade, next bar. 2 minutes out, let's see what we get. All right, keeping an eye on this clearly. Go ahead and just clean that up. Still there, but we're going to clean it up. Right, 35 seconds out, half decent pusher out of the bulls. Let's see how they close it up. And if with continuation setups like this, with a stop hunt up near the high of day, up toward 805-ish. Typically waiting for a bar to close, so. Come on, bulls. Nothing there. Ugly, ugly. Next bar. All right, ATR here on the 2-minute chart, sitting at about 11, which again is not horrendous. Not great, but it's not awful. How you guys doing today, by the way? Fundeds, evals, passing evals, blowing fundeds. What's up? There's no shame, man. I promise you there's no shame in blowing evals, blowing fundeds. What matters is, do you have a positive ROI on the average account? Not every account, but the average account. Are you making money collectively? If the answer is no, it doesn't mean you should quit. It just means you gotta maybe improve the sample size, or if not, improve the edge and the sample size. Have better discipline. Maddie, red on the eval, it's okay. Okay, assess maybe if you made a mistake, otherwise is it just a sample size issue, right? Kevin, 2 trades in the funded, 2 wins. Caden was green on evals, then went back to break even. It's alright, it happens. Same way that you end up green. I'm sorry, you end up red, and then go back to break even, it's okay. I need you guys not, like, this is the most important thing, I think. If you're gonna hang out, which I think you should, with, you know, in Discord chats, like ours, which is totally free, on a stream, you're gonna see a lot of people online who, they act as if losing a trade is a really bad thing. If it means you don't know what you're doing. And I know as a viewer, maybe you don't think it does, but it does probably affect your mentality a little bit as a viewer, and you can't buy into that because it's complete and utter bullshit. They don't know what they're talking about. They don't understand the business model. If you're taking a losing trade, according to your plan, what does it mean? It means you had discipline, which is part of a winning plan. If you have no discipline, like if you never lose a trade, you have to look at that and ask yourself, okay, what's going on here? You're probably running massively negative reward to risk to get the probability of success high, which is not in and of itself wrong, but there's probably very little risk management happening on the losing side. They're probably in a range market, they're adding to losers with no plan of stopping out, and it just happens to come back. Eventually, when it breaks into a trend, that comes back and bites you in the ass. Okay, so if someone's like, I never lose trades, statistically, over a big sample size, that is impossible. It is coming. Okay, so you have to understand that losing, I get it. This is beaten to death, but losing is part of a winning plan. So don't hold yourself. You say, oh, I lost 2 trades today. I suck. No, you don't. You have better discipline than a lot of other people who say, oh, I won 2 trades today. Yeah, because you didn't cut it when your plan said to. You moved a stop loss. That was emotional, like a child. Now, if you're taking losses because you entered on a setup that wasn't your plan or didn't really align with the way that you want to trade, that's another problem. Okay, but if you took a good setup, it just happened to not work, that's fucking okay, and you need to internalize that. It's all right. That's good. You did your job. Hey, this one coin flip didn't happen to fall on the weighted side of the coin. Fucking so what? Grow up, right? It's good. All right, big wick back upside on this bear bar. Nothing to do there. Next bar. Still watching this little flat bottom here. See if the bears can break it through. Pat, got my first 2K payout. Good work. Good work. Many more to come. John, reset time for me. Blew my 2 funded in a blow up on Friday, focusing on psychology this week. Yeah, John, size down, take it easy, get your confidence back. What's 1 week out of a career? Nothing. 70 seconds out here. Let's see how this 2-minute bar closes. By the way, 20 EMA on the 5-minute charts, that's 761-ish, so keeping that in mind here. All right, 10 seconds out. A lot of things to consider here, but I'll explain if we get an entry. I'll give it 15 seconds. 10 seconds. Also got to keep an eye on the 50% retracement. No trade, got to pull it. Next bar, minute 40 out. Now let's clean this up. We understand that that's there, but we'll clean that up along the way. All right, now here. See the 5 minute here? This is a 5 minute chart. Something that I'm really looking at is that 20 EMA here on the 5, though I gotta tell you, in most of the tests today, it hasn't really been respected tremendously well. It's slowed down. Because you know people are watching that. It's a self-fulfilling prophecy. Nothing more, nothing less. It's a self-fulfilling prophecy. So, let's head back here. And let's go to a 5 minute chart. And let's just see how this closes up. I'm willing to do it. I'm willing to do it. In other scenarios, that 20 EMA might stop me. But when we look at the history today, it just hasn't really been all that relevant since the open. It was relevant a little more pre-market. Well, let's see here. Now, we also got to keep an eye on that little descending area of support, but it's damn aggressive, so. All right, I'd call that about a B+ setup. So we'll give it 15 seconds, no more. See if we can get a fill here. You want to just see quick resolution on these B setups. No fill, pull it. Next bar, back to the 2 minute chart. All right, 95 seconds out. All right, 65 seconds out. This is looking even nicer because you can see we're pushing through on the 5 minute, pushing through that 20 EMA. Like, oh goodness, like we just talked about. Barely any hang up there on the 20 EMA on the 5. But I think we might have just gotten news, huh? That was quite a wick. Alright, so we are on a 2 minute chart here. Let's see. Damn big wick. I don't know if the bears are going to be able to backfill that. We got 17 seconds, so tad hesitant to put out that stop limit sell. But it's, 45 points away. I don't think we're going to get a big news bar filling me on accident. Yeah, big wick, nothing there, next bar. Minute 55 out, let's see how we close up. How many of you guys, by the way, have taken payouts from Take Profit Trader? I know a lot of you guys are using Take Profit Trader, which is very good to see. In my opinion, it is by far the best firm if you're trying to bootstrap going full time. If you're trying to scale and just get the numbers bigger, maybe you're already making money. Then Apex is going to be the best choice to scale, obviously, because you can go up to 20 accounts. The evals are cheaper. But with Take Profit, man, those daily payouts, that's a really big deal. So how many of you guys have hitting that up? Or hitting that up, the daily payouts? Manuel, I've taken several. Cool, good work. Peter, taking multiple Take Profit payouts. Yeah, Take Profit's nice, man. You request the payout. Depends on the time of day, but they usually approve within the day, usually. If you request later in the day, it might take till the next morning, but then once it's approved, you can proceed and it's in your bank account in like 5 seconds. All right, 30 seconds out. Yeah, man, well, when you request that first thing in the morning, it's usually within the hour. Later in the day, it usually takes till the next morning. All right. Stop limit sell. Let's see if we can place it. Oh, son of a bitch. That was very fast. Okay. That happens sometimes, man. I don't think there was anything I could do there. That thing just adjusted so quick. Immediately popped through. Next bar here, minute 37 out. All right, no follow through on that 5-minute close. Good close on the 5-minute, but back to the 2 here. We've got 26 seconds till the rollover here on the 2-minute chart. If we get a nice bear close, closing near the low, I'll take a look at that. But we also need to keep an eye on potential little ascending support level that I'll show you here in a second. All right, doji close there on the 2. Let's take a look at the 5-minute up top here, top left of your screen. This is something to look at. Right, you know the bulls are kind of looking for anything right now. Not to mention this is pretty damn close to the 50% retracement point on the whole day. So we'll keep an eye. Keep an eye out, but I am still willing to get short if we get a nice setup here out of the bears on this bar, 90 seconds out. Dramisha, if you were going to go long on the current chart, what would you be looking for confirmation of a reversal? Well, confirmation, I know what you mean, but let me first explain for everybody else, Dramisha. Confirmation doesn't mean confirmation. It just means enough for you to take a trade. Enough confirmation for you to feel comfortable taking the trade that you want to take in a reversal. Now, for me, when we're getting like intraday, you could call this a bull trend, bear trend. We're not in a trend market, we're in a range market, but you could call those moves intraday. I prefer 2 consecutive in this case, bull bars closing near the high. The issue is you start backfilling a lot of the range when you get that. So I would be open, by the way, to getting long on a stop limit buy above a single strong bull bar, especially after this this doji close. Okay, now is that a little bit early? Than you guys might be used to seeing me do? Yeah, maybe, but that is a setup of mine. Because if I wanted to wait for 2 consecutive bull bars, we're kind of waiting until we're pretty much 50% retracement on this move, which is arguably too late. So let's see what we get here as far as close. It would need to be a nice clean close out of the bulls. We'll get ready just in case. I don't think so. Nothing there, next bar. You guys haven't yet, man, please press like on the stream. Helps out tremendously. No idea. All right, minute 13 out from the close here of this 2-minute bar. See what we get. 26 seconds out here. I'm open if we get a nice strong bear bar. I'm open to go to get short, but it needs to be a strong bear bar. Can't be hesitant. If it is hesitant, then I start to think, yeah, it's too much of a risk of a sideways range here. Which is currently the situation we're in. I mean, if we get an inside close out of this bear bar, which we're going to get. All right, next bar here. VB says may hit 720s before buys. Okay, so you're looking at this is the 5 minute. So you're looking at this little low here. All right, we got 50 seconds left. Now, you guys know what I'm thinking about here is, am I willing to get long? Yeah, maybe, but the trade duration, I'd have to expect it to be a little bit longer on average, because we might just see this bounce around for a little while. Now, does that mean I can't put the trade on? Eh, not necessarily. Not necessarily. But, you know, on this trade compared to a continuation, is the average duration of the trade going to be a little longer? Yeah, probably, because sometimes you might get caught in a sideways trading range. Now, really, for me to be willing to do this here, I'd probably want to see this close above 56.50, which is the wick of this bear bar. So, let's see if we get that. No. Nope. Inside close, no trade, next bar. Well, that sideways trading range idea is certainly playing out, isn't it? You gotta be careful, man. A lot of these tight moves turn into sideways little trading ranges, especially in a range market like we're currently in. So that's something I'm always kind of thinking about. Especially when you near 50% retracement zones. Now, again, I don't want it to come off like when I say these things. I know to the... Maybe if you haven't been around for very long, at least on our stream here. Maybe to kind of quote-unquote the untrained ear, what I mean by that is you just haven't hung around here for a while yet. It sounds like I'm speaking in certainties. I'm not. Never. I'm speaking in probabilities and what I think makes logical sense. So, you know, I know it might sound like, yep, when you're at a 50% retracement, it's always going to enter a range. No, not true. Not true. Just enough, more often than not, lately, because the market's living and breathing, right? You always have to kind of adjust to make sure you maintain your edge. We've been seeing that happen a lot, so I'm thinking about that. It might hold me off from, you know, getting short. Like on this bar, for example. Inside close, inside of the range. I can't get short there. Yep, gains. Yeah, that makes a lot of sense. I mean, we're in a range market. A lot of your winners are going to come from negative reward to risk. And a lot of your losers are going to come from big breakout attempts. In a market like this, right now in a trend market, might be the other way around. All right, 33 seconds out here. Let's see how this 2-minute bar closes up. Inside close, right inside of the range. I mean, look at the 5-minute, man. We drew that line. Shit, what? 10 minutes ago now? And it's holding up. You can see it's pretty indecisive around this region. Now that in and of itself is certainly not enough for me to just say, oh, I'm gonna get long here. It's just interesting to see. As far as which way do we go from here, I gotta say, being that we're in a sideways trading range here on the 2-minute, I gotta say it's probably closer to 50-50 than anything. So let's just wait to see. Then we can take a trade. Minute 27 out. All right, here comes the rollover. Man. This is a hell of a battle. Sideways, killing off volatility. I mean, that last bar, 17-point range, that little breakout attempt, but bulls are not having that little breakout attempt out of the bears. And vice versa for the bears with the bull attempts. Yes, Tromisha, 100%. 100%. It took me a little while to realize this as well. My brain, it just works in an analytical manner. So early on, like really early on, I didn't give nearly enough credit to the context of the situation or the market or the self-fulfilling prophecy or the stock, the news that was on a stock, like a small cap momentum stock. I didn't allocate nearly enough importance to the context, and I was just like, well, it's all just a numbers game. So if I run this reward to risk and this win rate, then it's like I had the right idea, but I wasn't executing it properly early on. And bringing context into the equation changes everything. Now I know people are gonna be like, well, what do you mean by context? Is it a range market? Is it a trend market? Right? I mean, in futures, that's pretty much what we're looking at. You look at, okay, well, what about indicators? It's like, not big on indicators, except for ATR. It just shows you data, right? I mean, ATR shows you what's a reasonable ask in a range market. You know, it's a range market. Most breakout attempts aren't going to go tremendously far. ATR is under 12. Should you really be taking a reversion scalp looking for 75 points? Probably not. It's not contextual to the market we're in. That kind of thing, right? That's what I mean. When you apply those two together, the analytical mind with the contextual mind, shit changes fast. All right, 90 seconds out here. I'm gonna tell you, I'm interested in betting against a cocky bull move, meaning a bull bar that closes pretty much in between this wick high and this wick high. If we can get a close in between, I'd be willing to short that rollover. $50 seconds out. It's kind of sitting a little low of the region that I'd like it at. All right, 20 seconds out. Come on, bulls, get it up into that region. And work with me here. Bulls fading back downside. That's not what I want. Again, close around 23,750. We're not going to get it. I was interested in shorting that rollover, but no trade. Next bar. See if we can get it on this bar. Yeah, Joe, 5-minute chart closing here in 15 seconds. I'm seeing too much of a range on the 2-minute chart though. Let's clean this up. Let's just see how this would close. Yeah, inside close anyway, nothing there on the 5. All right, back to the 2. 56 seconds out. Christian, good to see you, brother. How we doing? Right, minute 45 out here. Now again, if we can get a decent sized bull bar closing, I'd say with leaning toward the higher end of this little range, but in between these two wicks essentially, I'd be very interested in shorting that little rollover. Good to hear, Christian. 65 seconds out. Let's see if we get it close, baby. All right, 6 seconds. Come on, Bulls. Keep it higher. Keep it higher. Keep it higher. Good. I like where that limit order sits. See if we can get a fill. It's a sell limit, by the way, right at 750. $15 more seconds. See if we can get a fill. There we go. I will take that fill. And what's ATR? ATR is 10. So I'm going to place my protective stop right above that wick. And suck that up a little bit. Okay. And we'll leave that there. See if we can get a pull back into the little range. Managing bar by bar here. ATR, man, 10.5. It's pretty tight. All right, 20 seconds left here on this 2-minute bar. Got my eye on 57.75. As far as kind of a management point, if we had to close above there, I'd manage this thing early, because that would be this wick high. All right, next bar here. Getting a bit of a pull in here. Now remember, ATR is 10. So let's see if we can get a bit more of a reasonable pullback in. Looking to get probably at least a full ATR here in this volatility. At least close to it. All right, Bears. A few more points. I saw maybe 7 points in the money flash. It's not quite enough. Looking to get a full ATR at least. Well, not necessarily at least, but close to it at least. That would put us pretty much halfway in this range as kind of a minimum. Half decent close out of the Bears. Not tremendous, but it's all right. All right, got better than an ATR. Got 12 points out of that scalp. Good. All right, kind of a slow day. 3 trades so far. First trade, what are we doing the first trade? First trade, we lost, I think, $1,300. Second trade, we made back like $1,450 or something. So we were sitting up like $100 or whatever. Pretty much break even. And after that trade, this is where we sit. So slow start here to the day. But I'll take it, man. I mean, 3 trades. We got plenty of work left to do here. You know, ATR, what's ATR at here? Pulling back into about 10 here on the 2-minute chart. So, let's keep working. Oops. Citizen, you got a daily target you shoot for? Yeah, it's kind of a rough target, but across all the accounts, all the fundeds, like 5,000 is kind of a rough target per day. So, slow day so far, but, I mean, listen, you know, when volatility is low, you gotta take what you can get. Can't force anything. You know, obviously, you know, 10,000 plus is more like the daily target, but 5,000 I think is a reasonable place to sit. Yeah, Tromisha, just betting against this breakout. Just betting against the breakout. Not sure exactly what you mean by neckline. But, yep. Range market. Gotta bet against the breaks. At least that's what I gotta do. Nice strong bear bar here. Alright, 45 seconds out. All right, now with a big, what I would call surprise, meaning volatility is higher than we might expect, bear bar, no matter really how this closes, I need at least one more bar, because even if this closed at the low of the bar, it's like, well, I could bet on the range, but that's a pretty damn strong bear bar, so I don't really want to get long. Wick back anyway, inside close. All right, back in 2 minutes. Don't go anywhere. We're back, baby. All right, 17 seconds out. A lot of inside closes here since that last scalp we took. Shorting here. Yes, Ricky. Yes, yes, yes. Man, if I hadn't, I'd be in trouble here. Got expenses, brother. So, yes, of course, I've taken money out of Take Profit Trader. I've taken money out of Apex. Those are both my 2 stops. Now, within the last few days, I've added Tradeify, which I've had the chance to trade only 1 day so far. I've added Bullinox, which I have not even, well, I took 1 test trade, so it's like $1 plus or minus, but that's a eval at Bullinox. I'll have to trade, I guess, a qualification account that I'll have to trade here. I don't know, some afternoon. And then, oh, my funded futures. I have an eval that I haven't started yet. So I am adding stops to the scaling journey. Of course, still trading Take Profit and Apex as my 2 primary. But it's time to start branching out to new props for me on the horizontal scaling. Comes the rollover, man, on the 2-minute. Another inside close. All right, ATR is still sitting 11. Well, 10, 11. It's holding above 10, man. That's at least good to see. All right, minute 15 out here. So this little channel here is what I'm watching. If we can see the bulls take it higher, give us a nice clean close near the top region of that channel, I'd be more than willing for a repeat of that last scalp we took to the short side. But right now we're kind of in the middle of the range, so got to hold off on this at this exact moment. But if the bulls can correct this in the next 20 seconds, I'll put it on. All right, Scott, good to see you today. Ten seconds out. All right, inside close. Well, all right, guys, I gotta hit lunch. I will come back and trade on my own in the afternoon. Hey, be patient. Let the setups come to you, and when they do, baby, fucking hit it hard. All right, it's a lot of this until it's not. You got to be willing to not take a trade for 3 hours, and then if, hey, man, you guys know my belief system. If 6 setups come within 30 minutes, you got to put them on. All right, it's not always so black and white. It's not always, yeah, you'll get a setup every 45 minutes. A lot of times you get nothing for 3 hours, and then sometimes you'll get, 8 trades in 45 minutes. It's the way it goes sometimes, especially when you're scalping. All right, guys, hey, use code BIG. Best deal always at Take Profit Trader, Apex, and Tradeify. All right, guys, I'm out of here. I'll see you tomorrow. Subscribe to the channel if you are not already. We're scalping every single day. All right, all the regulars, I'll see you guys tomorrow. Have a good one.